Namaskar, welcome to Whitetail. Here we will explore Rajesh Exports. Once considered one of the India's largest gold giant, is now facing allegations that could become one of the largest financial misrepresentation cases in Indian stock market history.
In the world of finance, trust and transparency are paramount. When allegations arise against a major player like Rajesh Exports, it sends ripples of concern throughout the market. The company's recent accusations of misrepresenting revenues to the staggering sum of around 15.15 lakh crore have left investors in a state of panic. With India's market regulator, SEBI, stepping into the fray with an interim order, the implications of these allegations could reshape investor confidence. As outlined by SEBI, the core issue revolves around a significant discrepancy in reported revenues. Between FY21 and FY25, Rajesh Exports allegedly inflated their financial figures, with nearly all revenue stemming from overseas subsidiaries, particularly Valcambi SA in Switzerland. However, upon investigation, it was found that SEBI could not substantiate these claims through necessary documentation. Requests for invoices and customer records were met with sparse evidence, raising red flags about the authenticity of the reported earnings. The severity of these allegations cannot be understated. Key findings by SEBI point to revenue inflation, where an astonishing 99.8% of the subsidiary-related figures couldn't be corroborated. Additionally, missing documentation regarding the fundamental details of transactions has emerged as a critical concern. With investigators unable to trace the trails necessary to validate operations abroad, the integrity of Rajesh Exports' financial statements comes into question. Further complicating the situation are allegations that company funds have traversed through accounts linked to promoters and personal portfolios, with the absence of requisite approvals heightening suspicions. This lack of transparency indicates potential corporate governance failures, leaving institutional investors, including LIC, grappling with uncertainty. In response to these developments, SEBI has mandated a fresh forensic audit and imposed restrictions on the company's chairman, signaling a serious approach to an unfolding crisis. For investors, the fallout from these revelations is profound. The once stalwart shares of Rajesh Exports have plunged, prompting an urgent re-evaluation of trust in the company. The allegations underscore a critical need for rigorous compliance and governance protocols within corporate structures. As investigations continue and new evidence comes to light, the future path for Rajesh Exports will remain uncertain, demanding a cautious approach from stakeholders who remain invested in the company's prospects. The ongoing controversy surrounding Rajesh Exports has triggered ripples of uncertainty, particularly with SEBI's recent allegations suggesting revenue misrepresentation. Chairman Rajesh Mehta has firmly rejected these accusations, articulating that SEBI focused solely on standalone numbers and overlooked the broader picture of consolidated revenue from its global operations. He emphasizes that Valcambi, one of the world's largest gold refiners, naturally generates substantial revenue due to the sheer volume of gold processed, reinforcing the legitimacy of their financial statements. As the narrative unfolds, the fallout on Rajesh Exports' stock price has been stark. Investors, faced with allegations that could amount to Rs 15.15 lakh crore, reacted almost instinctively. The market's immediate response was one of panic, leading to heavy selling pressure as stock prices rapidly hit lower circuits. Questions billowed around the integrity of reported revenues, the potential for penalties, and the fate of future earnings. Would lenders tighten their purse strings? What might a forensic audit uncover? The air thickened with speculation, reminding us how perception can swiftly eclipse reality in the fast-paced financial ecosystem. The significance of these events extends beyond Rajesh Exports. Institutional investors, notably LIC with its substantial 10% stake, have found themselves ensnared in this unfolding drama. Millions of LIC policyholders unknowingly share risk as the company grapples with intense scrutiny. Each day the investigation lingers, uncertainty looms larger over these institutional investors, who are caught between the potential fallout of proven allegations and the hope for a robust defense from Rajesh Exports that could mitigate the ripple effects on investor confidence. As we draw closer to the crux of this case, it stands to become one of the most meticulously observed corporate investigations in India's financial history. With SEBI's claims invoking serious concerns about revenue practices, governance issues, and lapses in disclosure, the ramifications could be profound. Conversely, Rajesh Exports maintains its position, asserting that its financial reporting adheres to all necessary standards. In a realm where trust is currency, this scenario serves as a crucial reminder to investors. Robust revenue figures alone don't assure safety. Clarity, governance, and accurate financial reporting hold equal weight. As stakeholders remain vigilant, the unfolding investigation will undoubtedly be a pivotal watchpoint for the market.